Hi, everybody. Thanks for tuning in. It's been a crazy time in the stock market lately, but that also means that there are some excellent opportunities for patient long term investors to get in now while things are down. And one of my favorite stock opportunities to buy right now is Bank of America. So we're going to talk about that today. Before we do, please hit subscribe if you haven't already. I do videos on stock ideas and general investing and personal finance topics all the time. And I'd love for you to keep up with all of my latest content. And also check out a message from our sponsor, The Motley Fool, where you can go to the link you see on your screen and get the top 10 stocks to buy right now. So leave any comments you have in the description and let's get into it. So, Bank of America, just to kind of give an overview, it hasn't been a great performing stock lately. That shouldn't come as a surprise given what's going on in the market, but it has underperformed the S&P. It's down by 40% from its 52-week high. The stock is a great dividend stock. It yields about 3% right now, but it's down from $50 a share roughly to about $31 a share as I'm speaking. So just a little bit about the bank. Bank of America, it doesn't really need that much of an introduction as far as what they do and what the business is. But just to kind of give you an idea of the scale, Bank of America generated almost $23 billion of revenue in the second quarter. It generated over $6 billion of profit off that. So this is a very big and very profitable bank. Its profitability numbers have done great recently. It's really done a great job of transforming since the financial crisis when the company's asset quality was not so great. It has over $3 trillion in total assets, a loan portfolio over $1 trillion worth of just loans to consumers and businesses, and $2 trillion of deposits on its balance sheet. So big institution. Now, to be fair, the stock's not down for no reason. I mentioned it's down about 40% from the highs, and there are some really good reasons for that. There's been a clear slowdown in consumer spending, for example. Inflation has put pressure on consumers. Consumers spend less. That creates less demand for loans. And obviously, as a bank, your business is to lend money. That's not a good thing. Number two, and more importantly, there's a big risk of a recession coming up. We're already, by some metrics, in a recession, but not. It hasn't really been declared yet. If we do fall into a deep recession, that's bad news for banks. It generally means an uptick in loan defaults, and it also means less demand for loans for a while. So you could see a really tough period for banks if we fall into a recession. So a lot of the fear is definitely baked into the stock's price. But in Bank of America's case, I think they're in a really good position to kind of balance out the downside with a lot of good parts of their business, specifically when it comes to interest. Bank of America has one of the highest portfolios of non interest bearing deposits in the banking industry. And not only that, their deposits, even the ones that bear interest, are very low interest. As a consumer, everybody's frustrated with their bank that pays 0.01% on savings accounts and things like that. But from a bank's point of view, that's a great model for profitability. It's essentially free capital. Bank of America, believe it or not, right in the second quarter, so after rates started going up, the average interest rate they're paying on deposits is just 0.2% in their consumer business. Or I'm sorry, 0.02% in their consumer business. So very low interest deposit base. But we all know what's happening right now. The Federal Reserve is raising interest rates. Things like mortgage rates and auto loan rates tend to be gravitating higher. So you're seeing the amount of interest banks are making go up, but Bank of America's cost of capital really isn't moving. So that creates a big spread in the profit margin, a growing spread in the profit margin, like you can see on your screen right now. And Bank of America actually estimates that a 100 basis point shift in the curve, which is 1 percentage point. So every time interest rates as a whole rise by 1%, Bank of America estimates that would translate to an additional $5 billion in annual net interest income. Now, rates have already risen by 2 or 3% across the board, but it sounds like the Federal Reserve's not done yet. So this can really help to offset, or if not even overshadow, the negative effects of the economic turmoil we're facing right now. And we're seeing consumer spending remaining strong in the first half of the year, which I know that the tough times didn't really start until about the second quarter. But in the first half of the year, Bank of America says consumer spending card payments in their business was up 13% year over year in the first half. So we're seeing strong consumer activity. Their management team's fantastic. Brian Moynihan has done a great job as CEO of improving asset quality since the financial crisis. I've mentioned that several times in articles, but here's really what it means. The loan mix, as you can see on your screen right now, has changed a lot. It's become a lot more dependent on commercial loans, which are more predictable than consumer loans. And when it comes on the consumer side, the mix has definitely shifted away from home equity loans and credit cards, which used to make up a much bigger proportion of the company's loan portfolio. And now it's more in favor of more predictable loan types. So great asset quality. The mortgage lending standards we know are kind of up across the board. Um, Ignore the small dog in the background right there. But very strong asset base. Their net charge-off rate is actually relatively low. It's about 0.23 right now. That's historically low, but it is starting to tick up a little bit. As you can see, that's definitely a risk factor going forward. Still very low, and if it stays in the low, in the zero point 0.2 to zero point 0.3, even to the zero point 0.4 range, it's not really a big cause for alarm. Just to put that in perspective, the net charge-off rate was in the 3 to 4% range during the financial crisis. So still not a big cause for alarm right there. The company's done a great job of capital return, especially when it comes to buybacks. Uh, Buybacks can be a great tool to create shareholder value over the long term, especially when a stock's trading cheaply, like Bank of America is. The company has reduced its outstanding share count by about 2 billion shares over the past 5 years, from about 10 billion to about 8 billion, just from buybacks, which can be a great driver of earnings growth and of shareholder value. So not without risk, but I feel like the risk reward is excellent at these levels in Bank of America. Again, very, very profitable business. It would take a real crisis to make the bank unprofitable at this point. And it's trading for its lowest valuation since 2020, when the COVID crash sent all banks really kind of scrambling. Um, Trading for just at its book value right now. So you're you're getting its assets at cost essentially, which is really historically low for any solid bank. It's my biggest bank stock position. It's one I've been adding to and plan to continue doing so as long as it stays at these levels. And it's a cornerstone of my portfolio, both for income and growth. And I can see it being that for decades to come. I'm a big fan of this company, especially their present management team. So that's one of my favorite stocks in the market right now after the recent declines. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.